Today on Fear and Greed, Reserve Bank boss Michele Bullock hints that the next cut in interest rates could be some way off. Both political parties promise to spend billions of dollars on Medicare as the unofficial election campaign ramps up. And last year's wonder float on the ASX, Guzman Y Gomez, gets hammered over weak sales in the US. Plus, auction clearance rates bounce back and $2.4 billion worth of cryptocurrency is stolen from a major exchange. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Monday, the 24th of February, 2025. I'm Michael Thompson and good morning, Sean Aylmer.
Good morning, Michael.
Sean, big show today. The main story this morning, Reserve Bank Governor Michele Bullock appeared before Parliament on Friday, and she warned that if there were too many rate cuts, inflation pressures could re-emerge, undermining 3 years of hard work.
She said the board's cautious about the prospect of future rate cuts. Of course, we had one last week, the first time we got a rate cut in more than 4 years. The bank isn't committed to any particular course of action. The central bank is targeting an inflation rate of 2.5%, she said. That's the midpoint of the 2 to 3%. When asked about that, she was pretty specific, saying that no, 2.5%. We're not targeting 2.7%. We're targeting 2.5%. She also added that services inflation, that until the end of last year had been pretty persistent, is finally coming back under control. Ms. Bullock said Donald Trump's tariffs will be a negative for economic growth in Australia, but the effect on inflation is less clear. There's pros and cons on that one. All the uncertainty surrounding the Trump administration's policies could well damage the global economy, and that won't help Australia, she said.
As far as interest rate cuts go, she really has just doubled down on the messaging from the press conference after the cut last week, because she really came out and tried to hose down any excitement after that cut, and she's really doubled down on that in Parliament.
Yeah, she sure has. She clearly cut rates last week with sort of one hand thinking, well, the good idea, the other hand thinking, oh, I'm not so sure whether we should be doing that. And so she is at pains to say all this did was reverse a rate hike of kind of November, 12 months ago. And that's all it is. No more than that. And so don't read any more into it.
The other thing that I thought was interesting coming out of that appearance on Friday was that she pointed to low-income renters being the cohort hardest hit by the effect of cost of living pressures during the past couple of years.
Yes, so she talked about the big increase in rents. Then you add inflation on top of that. She said that low-income renters are a group that's often forgotten, but they've been hit really hard by what's gone on. Ms. Bullock said the unemployment figures out last week, which shows a big jump in full-time employment, underscores the need to be cautious on rates. She's also committed to keeping cash in the economy. Fewer and fewer people, of course, are using cash, meaning the movement of money, the movement of cash is becoming uneconomical. The banks use it, so to Aussie Post, some of the big retailers like Wesfarmers, Bunnings, those sorts of people. But the company that moves the cash around basically said it's uneconomical. They've had a bailout package from government, and Ms. Bullock said we will make sure cash still runs through the economy. She also conceded that the central bank, under her predecessor Philip Lowe, was late to the party when it came to interest rate increases. Of course, the Reserve Bank acted well later than most other central banks. She added that the Reserve Bank doesn't want to be late again when cutting interest rates.
Sean, we are entering the final week of the December half earnings season. It's been a big few weeks, hasn't it?
It has.
And the ASX hasn't done so well during the first couple of weeks of reporting.
No. So it was down 3% last week, mostly on the back of an 8% drop by the banks, or the banking index at least. That's the worst week for the banks since the coronavirus outbreak almost 5 years ago. Of course, the banks were priced for perfection, but disappointing results from National Australia Bank, less so from Westpac. Bendigo and Adelaide were disappointing as well. That triggered a sell-off across the sector. The big three miners, Rio, BHP and Fortescue Metals, also disappointed. So in Australia, when you get the banks disappointing and the miners disappointing and a sell-off, the whole market goes backwards. Doesn't look a lot better today. Wall Street fell 1.7% over the weekend. The Nasdaq was actually off 2.2%, but the S&P 500 was off that 1.7%. It was the worst session all this year thus far. So it doesn't augur well for our local market when trading begins at 10 a.m.
That's a big drop on Wall Street. What happened there?
Well, the Trump glow is wearing off just a bit. There were reports
Oh,
over the weekend showing consumer and business sentiment in the US fell this month. That's on the back of the tariff threats. Now, tariffs mean manufacturers in the US will have to pay more for imports, pay more for their inputs into the products they make. That'll hurt earnings. Among consumers, they're worried that the tariffs will push up prices and they'll start to climb at a faster rate. So both consumer and business sentiment has come off there, and that hurt Wall Street. Adding to those concerns, the world's biggest retailer, Walmart, late last week forecast lower than expected profit, all on the back of uncertainty around consumer behaviour and costs, exactly the same as that consumer sentiment, business sentiment surveys. Running through the numbers, the Aussie dollar's buying about 63.5 US cents at the moment. Bitcoin's around 95,000 US dollars a unit. Gold's at 29.40 an ounce, and oil's off nearly 3% at about 72 US dollars a barrel.
We mentioned reporting season, Sean, and immediately after the show, we have a great interview coming up with Wesfarmers Managing Director Rob Scott. It's part of our partnership with AusBiz, which is Australia's leading provider of live and on-demand video of the latest news in Australian business, markets, economy, startups, pretty much everything. You can sign up for free at ausbiz.com.au, but this is a great chat, this one.
Yes, it's a very frank conversation, I think, from the boss of Wesfarmers, Rob Scott. He talks about the growth of Kmart's Anko brand. He talks about Bunnings pushing the pet care, right through to what went wrong with online retailer Catch, which of course they closed down, and what the arrival of Chemist Warehouse on the ASX means for Priceline pharmacies, which Wesfarmers owns. It's a great chat.
Yeah, it certainly is. It is coming up after the show, so stick around for that one. Lots more still to come. We're talking about the election campaign heating up with this focus on bulk billing, which is very interesting. Some great results from weekend auctions. That $2.4 billion crypto theft. So much still to come. We'll be back in a moment with the rest of the day's business news. Sean, Medicare will be a centrepiece of the upcoming election campaign, with Prime Minister Anthony Albanese promising to spend about $8.5 billion over 4 years to boost payments to doctors who don't charge out-of-pocket expenses for patients.
Bulk billing is back, Michael, or at least that's what the ALP wants, assuming it is re-elected. The goal is to lift the rate of bulk bill doctor visits from 78% today to 90% by 2030, which brings me to the point, 78% today. Why is it that I can only find the 22% that don't bulk bill?
It does. It does feel very, very hard to find a bulk billing doctor these days, even with kids.
Yeah,
I'm surprised at the number of people that are still charging kind of full rates for kids now. I'm like, this hurts. It hurts.
It really does. Healthcare is one of those issues that Labor thinks it's got its nose in front on. Tony Abbott, the former coalition leader, former Prime Minister, tried to wind back Medicare, and the coalition is definitely seen as less friendly towards Medicare. However, opposition leader Peter Dutton was pretty quick yesterday to come and match Labor's bulk billing pledge. So all that money to improve bulk billing, or the availability of bulk billing, seems to be pledged no matter who wins the next election. The coalition, I would say, is working really hard to look like it supports universal healthcare. So apart from matching the Medicare pledge, they've also matching the ALP's $573 million for a women's health package, supporting the government's $1.7 billion for public hospitals. Then on top of that, the coalition's promised $500 million to boost the number of psychology appointments that can be claimed under Medicare.
Just a quick one. Federal Treasurer Jim Chalmers is on his way to Washington to discuss the potential of tariffs on Australian exports to the US.
He'll be talking to his opposite number, Scott Bessent, who is the Treasury Secretary. Tariffs will be front and centre, though Mr. Chalmers yesterday said he doesn't really expect a resolution during his trip, no doubt.
It was the first proper weekend of auctions this year, Sean. Very exciting. And you got to say, it is incredible what an interest rate cut can do, right? The national preliminary clearance rate came in at 72.1%. That is the best since July last year.
Incredible, isn't it? Almost 3,000 auctions. The clearance rate in Sydney was 74%, 72% in Melbourne. Adelaide and Canberra were pretty good too. Brisbane was a touch weak. That means we've had two 70% clearance rates in a row. Now, when you adjust that, that'll come down to low 60s. It is quite phenomenal when buyers get confident that interest rates are going to fall. So obviously we had the fall during last week, but even ahead of that, everyone expected it to happen. Just how more buoyant the property market becomes.
Yeah, it really is quite extraordinary, especially when the interest rate cut itself was only very, very small, isn't it? It just goes to show that enthusiasm is suddenly back, right?
Yeah, sure is.
Now, American real estate giant CoStar has made a $4.20 a share bid for Domain, a 35% premium to its most recent close. That values the bid at $2.7 billion.
And Domain's board said it is considering the offer. The US group has already built a significant stake in the local company, which has struggled over the past year. Its market value has dropped by 4% over the last 12 months. REA, the big competitor, up 40%. That was before news of the bid. When the bid hit, Domain's share price jumped 40%. REA fell 11%. Key to the outcome will be controlling shareholder Nine Entertainment, owns about 60% of Domain. It said it's considering the proposal. Its share price jumped 20% on Friday. CoStar is listed on NASDAQ, says it is the world's largest real estate information company. Been on a bit of a buying spree recently, purchasing a British group called On the Market for about $200 million last year.
I mentioned this one earlier, Sean. Guzman Y Gomez, the biggest float of 2024, the one that everyone got really excited about, has reported earnings higher than expectations for the 6 months to the end of December, but that didn't prevent a sell-off.
No. Same-store sales were up 9%, in part due to the popularity of the $12 chicken meal, Michael. Higher breakfast turnover and more delivery orders. Also helping, it's 11 24/7 outlets. However, the group didn't provide forward guidance and said that sales fell or losses widened at its 5 US stores. Now, by the close, Guzman's share price was down 14%. Guzman had an incredible run last year, but it's an expensive stock relative to some of its competitors, Domino's, for example. Much of its valuation is about the promise of future growth, especially in the US. Investors are now worried that the promise of that growth won't come to fruition, particularly in the US, hence the big sell-off on Friday.
Why wouldn't it provide forward guidance?
Because it's the uncertainty. So if you're, particularly in the US at the moment, if you're going to have tariffs in the US, I don't quite know how that affects most of the product inputs into Guzman Y Gomez would be locally sourced, you would think.
Yeah.
But you don't know. And there's just so much uncertainty about operating in that environment at the moment.
Okay. All right. And suddenly by not providing forward guidance, it creates even more uncertainty as well. So it's just
investors like CEOs that come out and say, we reckon in the next 6 months, this is going to happen.
Yeah. Goodness me. Okay, one more, Sean, before we get to international news. QBE has posted a higher net profit and lifted its dividend after paying out fewer claims for natural catastrophes over the past year.
Not a lot of great results last week. QBE, I don't know whether it was great, but it's a very good result for the full year ending December 2024. The group made $2.8 billion. It expects premium growth in the mid-single digits in the upcoming year. For last year, QBE, which operates extensively in the US, said it expects exposure from the Los Angeles wildfires last month to total around $200 million. Its share price closed up 3% on Friday.
Turning to international news now. This story, Sean, is really quite extraordinary. Over the weekend, the Trump administration sent emails to US federal government employees, which is essentially the equivalent of the Australian Public Service, telling them to detail their work accomplishments from the previous week or risk losing their jobs.
The emails came shortly after Elon Musk, the billionaire head of the Trump administration's Department of Government Efficiency, posted on the social media site X that not responding to the email would be viewed as a resignation. According to a report on Reuters, Musk issued his post just hours after President Donald Trump posted on his own social media network, Truth Social, that DOGE, the Department of Government Efficiency, should get more aggressive in its attempts to downsize and reshape the 2.3 million strong federal workforce. It's unclear what legal basis Musk has to terminate federal workers if they don't respond to his request. What would happen to employees that can't detail confidential work? In some cases, it's impossible for them to do. So workers at the Consumer Financial Protection Bureau, for example, they receive the email. Most of those staff have been ordered not to perform any tasks since early this month. Kind of creates a conundrum. when 3 weeks ago they said, do not do anything. And now they said, if you haven't done anything, you're going to get fired. You kind of have to wonder at what point this sort of behavior, it certainly will crack people. Like, you really feel sorry for the individuals, but also for the general population to see this. They must realize at some point that this is just irrational.
It's this has got to be unprecedented, really, what we're seeing here. That is staggering. So we'll see how that one plays out throughout the rest of the week. One last one to finish off on, Sean, and this is huge, actually. Crypto exchange Bybit said it was hacked, resulting in what analysts estimate was the loss of almost $2.4 billion worth of tokens in the biggest theft ever experienced in the industry.
A hacker took control of one of Bybit's offline Ethereum wallets and estimated 1.46 billion US, 2.4 billion Aussie, in assets flowed out of the wallet in a series of suspicious transactions, according to Bloomberg. Now, research firm Arkham Intelligence confirmed about 1.4 billion US in outflows from the exchange, saying the funds have begun to move to new addresses where they are being sold. The hack is the largest ever crypto theft, according to Elliptic, which is a blockchain analytics firm. It passes the 611 US stole from Poly Network in 2021. It could well be the biggest financial theft ever.
That is huge.
Yeah.
That is just, the largest incident ever, not just crypto, was one report I was reading, which just makes you realize the scale of this. Sean, it's been a big show. We've had a lot to get through. It's going to be a big week. Up next is Fear and Greed the Week Ahead, featuring resident economist Stephen Koukoulas, because there is a lot happening.
Yes. His pulse is still racing from last week. Then we start talking to him about this week and things like inflation, monthly inflation figures come out. He's very excited about that too. And Stephen loves an election. I mean, plenty going on for the Kook at the moment.
Oh, yeah, there certainly is. And it is basically must-listen material, because it helps you to prepare for what's coming up in the week ahead. And after that Fear and Greed daily interview with Wesfarmers' Rob Scott, plenty of good listening coming up in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which is also where you can sign up for our free weekly newsletter. It's coming out on Wednesday. Thank you very much, Sean.
Thank you, Michael.
It's Monday, the 24th of February, 2025. Make sure you're following the podcast, and please join us online on LinkedIn, Instagram, X, TikTok, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.